Someone walks into a bank to open a simple checking account. No loan, no credit card, just a place to deposit a paycheck, and they're told no. Not because of their credit score, not because of anything on their credit report, because of a report they've never heard of, tracking a history they didn't know was being recorded. Most people know about the 3 major credit bureaus. Far fewer know that deposit account behavior is tracked separately by different agencies, and that this record can lock someone out of basic banking for years. Tonight, what these reports are, what lands on them, how long it stays, and what can actually be done about it. There's a category of consumer reporting agency that specializes in deposit account history rather than credit history. ChexSystems is the most widely known, though it isn't the only one operating in this space. These agencies collect information from banks and credit unions about how customers have handled checking and savings accounts. When someone applies to open a new account, the institution often pulls this report as part of the decision. Here's the critical distinction. This has nothing to do with borrowing. A person can have a perfect credit score, no debt, and a long history of on-time payments, and still be declined for a basic checking account because of what appears on the separate report. That disconnect is why it blindsides people. Every piece of financial advice tells them to watch their credit score. Nobody tells them there's a second file being kept. Not every banking mistake ends up reported, but several specific things commonly do. Accounts closed with a negative balance are the most common entry. If an account goes negative through overdrafts, fees, or a return deposit, and the balance is never repaid before the bank closes the account, that closure and the unpaid amount typically get reported. Excessive overdraft activity can be reported even when the balance is eventually repaid, depending on the institution and the pattern. Suspected fraud is reported. This includes deposit fraud, check fraud, and situations where the institution believes intentional misuse occurred. Involuntary account closure, when the bank closes an account rather than the customer, is generally reportable. Return deposits, particularly repeated ones, can generate entries. And here's the part that catches people. The amounts involved are often small. An account that went negative by a modest amount, accrued fees, and got closed while the person had moved on and forgotten about it. That small forgotten balance can block account access years later. Under federal law, most negative information on consumer reports has time limits, and deposit account reporting generally follows a similar framework, commonly reported as up to 5 years for these records. But there's an important nuance. The clock and the consequence are 2 different things. A negative entry can be paid off and still remain on the report, updated, to show it was paid rather than removed entirely. Paid status is significantly better than unpaid status. Many institutions will approve an application with a paid entry that they decline with an unpaid one, but the entry itself may persist. This is why the practical advice is always to resolve the underlying balance regardless of whether it removes the entry. The status change alone often changes outcomes. The process here mirrors credit reports, and most people don't realize it exists. These agencies are consumer reporting agencies under federal law, which means consumers generally have the right to request a copy of their own report, typically at no cost once per year. If someone was denied an account based on the report, there's usually a right to a free copy following that denial as well. Requesting it is worth doing before applying anywhere, not after. Walking into a bank without knowing what's on file means finding out through a denial, which is both discouraging and, in some cases, generates its own inquiry record. What to look for once the report arrives: entries that don't belong, amounts that don't match, accounts that were actually resolved but still show unpaid, and anything from institutions never used. Errors happen here, just as they do on credit reports, and the dispute process works similarly. There are real paths forward, and they work in a specific order. First, dispute anything inaccurate. The same federal framework governing credit report disputes generally applies here. Inaccurate entries can be challenged. The agency has to investigate, and unverifiable information has to be corrected or removed. Second, resolve legitimate balances. Contact the bank that reported it, not the reporting agency, and pay what's owed. Ask specifically whether they'll update the reporting once it's paid. Get any agreement in writing before paying if possible. Paid status is meaningfully better than unpaid, even when the entry stays. Third, know that second chance accounts exist. Many banks and credit unions offer checking accounts designed specifically for people who can't qualify for standard accounts. They often carry monthly fees and some restrictions, but they provide legitimate banking access. After a period of clean history, many convert to standard accounts. Fourth, credit unions are worth trying. Not all institutions check these reports, and credit unions in particular sometimes have more flexible policies than large national banks. Membership requirements vary, but are often more accessible than people assume. Fifth, and this matters most for prevention, the behavior that generates these entries is largely avoidable once it's understood. Declining overdraft coverage on debit cards means transactions decline instead of clearing into a negative balance. Knowing the difference between available balance and current balance prevents spending against funds still on hold, and formally closing accounts rather than abandoning them prevents small balances from turning into reported entries years later. The reason this catches people off guard is simple. It's a system that operates in the background, that nobody explains, and that most financial education completely ignores. But it operates on the same principles as credit reporting. There's a file. Consumers have the right to see it. Errors can be disputed. Legitimate items can be resolved. And there are paths to banking access even while the record is still there. The people who get locked out for years are usually the ones who never found out the report existed. The ones who recover are the ones who requested it, read it, and worked through it item by item. Request the report. Read what's actually on it. Dispute what's wrong. Resolve what's real, and prevent the next entry by understanding the mechanics that create them. This is Credit Clarity. We'll see you in the next one.